Revisiting market profile. All right, it's time to do a deeper dive into MP. So we have the value area high, the value area low, and the point of control, right? And so just a quick refresher, if it's been a little while, for market profile as to what that is. The market profile is what creates the TPO. So that's the time price opportunity. And so remember, they're broken up into 30-minute blocks, usually represented by a letter. And so each 30-minute time frame will have a range of price, right? So you have time and you have price are the key kind of building blocks of that. And then you have different areas where that time is accumulated as far as how much time is spent. And, you know, like when we talk about volume profile as well, when the market's spent, you know, a 30-minute block of time in a specific area, you can already anticipate that that's going to have higher volume as well, right? Because if it's in an area for a long time, volume just accumulates, right? So that's how, so volume profile and market profile still continue, they go hand in hand in that aspect as well. All right, so the value area, or VA, is the range of prices where 70% of the time spent for the day is located, right? So you remember the bell curve that we talked about for the, the statistics that we were talking about as far as where price is spent, what it's in value, right? Like the meat of a bell-shaped distribution curve. So similar to what you see in the colorful part of the profile below and to the left, which is down here, right? This is going to be your value area here in the orange. So 70%, it's already pre-designed that 70% of your time of the volume is is the value area itself. So the red areas above and below are considered to be outside of the value area. And to the right, we see a range type day here, as price was rejected every time price exploration happened beyond the previous day's value area, higher or lower, right? So again, this is what's being built during the day. So this becomes value, this becomes important, right? Because it's our developing value. But what we're looking at is in reference to what happened the previous day, right? So what we can see here is, even though we had price exploration obviously earlier in the day that came up here, came down to this area where this value area was built, right? We had our VPOC here, which is around this 10.2 price level, right? And so this is where the previous day's value was, right? Specific point or specific price, value area. So now, as we come in here, right, and you can see how it reacts with the edges of the value, right, which is, and we're going to go in and we'll talk about this, but this essentially is the value area high, and this is the value area low, right? So what we would want to see during a trend, and we're going to go over this, but what we want to see in a trend trade is we want to see price break out of previous value, and we want it to continue to trend outside of that, right? If price breaks out, attempts to break out of value, and it gets sucked back down into value, this is often signs and symptoms of what's going to be a rotational type day. Now, it doesn't mean that it can't attempt to break out, come down, test previous day's value, and then break out higher from there. But it's a red flag, right? It's a warning sign. When it's really strong, oftentimes it'll break out of value, come back down, maybe test the value area high, and then it'll just keep rocking, right? So that's part of the nuances, right? That's part of learning to read the price action and all that. So but this is just an example of a rotational day, and essentially price came down here, we tested the low end of value here, it was rejected, price was rejected higher, remember that term? It was rejected higher, back towards the VPOC, and ultimately it's the other end of value, attempted to break out to the upside, no go there, sucked back down into value, right? So we come back down, we have a bit of consolidation here and a breakdown here, back to the other side of the range, right? So bottom range, top of range, bottom range, top of range, and there you go. There's your rotational day, right? All right, so the value area high and low. So they're the prices at which the high and low edges of value lie. And again, this is all automatic in the programming of the market profile. It's based on the, you have your 70% area, and it just happens to be where the top of that and the bottom of that lies. So we discussed that a trend can be described as price exploration away from value. This is not a perfect science, but it gives us points of reference that we can make better informed decisions from. So oftentimes, these areas are tested and rejected as that price exploration takes place. So it only makes sense that we would want to monitor how price reacts around these levels. Rejection back into value would tell us that there is not enough buying or selling pressure to continue the trend at that time. Remember, our only job is to objectively let the market tell us what it wants to do and play along. Right? So when we talk about, especially in like commodity markets like the futures market, there's, for every one seller or buyer, there is the opposite buyer or seller, right? So there's never more buyers than there is sellers. It all has to do with buying and selling pressure, right? With how aggressive the market's being bought up, those bids are being executed, that moves price higher. And then as it comes down, right, whether through profit taking or whatever, and it's bid back up, when that's happening, we know that there is real buying pressure. It's not that there's an outweighted, people buying, additional buyers coming into the market. No, it's people with money. It's large institutions, large traders coming in and pushing that market higher. So whenever I think of that, it helps me. We want to be on the back of their buying and selling pressure, right? We want to ride those. We want to ride that head or that tailwind. All right, let's take a look. So first, notice the red lines on the previous day's market profile that represents the value area high and low. And this is just the way I have it set up. This is my personal chart. So we have value area high here, value area low, volume point of control, or market point of control. I guess at this point it would just be a point of control. VPOC is a very often slated term for, obviously, for the volume profile though, and oftentimes they are similar as far as where they end up, but not always. So, and then we have the tails, right? So this is the areas outside of or outside of value, right, where price exploration happened and ultimately was rejected. So here you can see the first part of the current day, the split profile to the right, and so this is what's called a split profile. So I think this is quite neat, right? So this is your regular profile, and then in the Sierra chart program, you could choose to split the profile, and what that does is it gives each block of time its own individual kind of line here as it breaks it open, and you can actually see how the market traded through the market profile and what created the market profile, right? So we can break down and we can see what happened here. So here you can see the first part of the current day, the split profile to the right, resulted in some consolidation inside the previous day's value area. Support rested on the previous day's point of control quite nicely, right? So that's exactly what you see. So yesterday's value, or the previous day's value, right? Volume, or the market point of control is here, and so the market opened up, and so it just consolidated and bounced in this area, and so it came down, tested that point of control, this node here, right? This kind of area here, and it was rejected higher, right? So at this point in time, that is a rotational market. It does not want to go higher. It doesn't want to go lower. It's very happy and very content right where it's at. So then let's move on to the next part. So once price broke lower, the value area low got a test in the end time period, and after that, it was off to the races to the downside. So just like I mentioned earlier, as far as like it breaking down or breaking out, and then retesting that area and then continuing to move, right? So that's exactly what we had here, right? So we're watching both of these levels, right? Came down here, market in the M period finally decided to break down. We had a successful breakout through this point of control area and these previous support levels, broke down through it. Bummer. All right, sorry about that. Accidentally clicking over here. So price broke down, came back up, retested this value area low, right? Just tagged it, and then just kept on rolling, right? So this is a sign of price exploration successful. I mean, there's times where you could have a major breakout like this could happen from a news event or large volume coming through, right? Come in and break down and then pop right back up into value here and continue to consolidate, right? That would be a fake out, right? That happens a lot on honestly, on consolidation and rotational type days. That kind of action happens because, again, there's trend traders inside of that waiting for price to break out. And so they will drive price up, right? Things can get overheated in the short term. They'll drive price up. And then once price moves higher, lower, there's no buying pressure or selling pressure to sustain the move. And then ultimately it gets sucked back into value. So again, here you can see that price consolidation for the first half of the day came up, tested, and just continued to move lower and trend throughout the day. So this was a key piece of evidence that the path of least resistance is lower, and that's where our focus should be. So again, that's talking about the move down, test, and then the additional breakout here. All right, the point of control, or the POC. So using the previous day's POC, the magenta line, is an easy way to view the immediate trend and a quick way to identify where we currently are regarding previous value. So here we can see that the previous day was rejected lower from its previous day, as it was not able to test the POC and then move decidedly lower. So now at this point we're talking about this day here not being able to test this area. So before, right, we had where it's already in value and it's testing this value. So this is a this is a balanced day, right? We're going to go over that as well here shortly. But here, obviously price is moving lower. So if we can gather clues from just looking at this really quick, we can see that, okay, well, this is the point of control. So this was the previous day's value. Price opened here, shot up towards it, wasn't even able to effectively intersect that value before it moved back lower and stayed lower the rest of the day. So what does this tell me? This was a strong down day. So not only is the trend lower because we go, okay, this value is here, was it 1302, and now the next day's value, closing value was essentially 12910, right? So this instantly tells us that the trend is lower. It's a quick reference point. Here we can see that the previous day was rejected lower from its previous day, as it was not able to test the POC and then move decidedly lower. Okay, so we just went over that, right? But again, I want to overemphasize that these things are very, very important. When we're talking about value and we're talking about price in conjunction with price action, all we're looking for is clues, right? And we'll tie that into our strategy. But on this day, that's a very big deal. The fact that it could not come up and even test that value, not that it couldn't come down and then move back higher, but if the price continues to trend down and away from, it is trending down away from value, and if it couldn't even touch the previous day's value, then that is a very, very strong weakness that's happening in the market that you want to take advantage of. All right, the fact that the current consolidation rested at POC and could not even get a decent retracement back up to the previous value area high after such a large move lower the previous day tells us that the market is heavy to the downside. Okay, so again, another clue, right? And we're going to talk about mean reversion moving forward as well, which essentially is the idea that price never moves in one direction constantly, right? There's always ebbs and flows, right? So you expect usually, and you guys know this, after you have a very, very large day to the downside, oftentimes you get a bounce, right? just almost, it seems like for the sake of a bounce. You're like, man, I just want the market to keep moving lower, but you're going to get a bounce after a large move down because eventually that buying or selling pressure subsides, right? So the fact that it couldn't touch value, right? Because let's say we're looking at this when we're doing our market prep and we're trying to figure out, let's say we're in here in the morning time, we're trying to figure out what the market's up to, right? We see that this day was rejected lower from the POC, wasn't able to intersect that, so we take that as a definite sign of weakness. Broke down, moved down, very large range expansion to the downside, and especially where value essentially closed towards the lows of the day, right? And then the next morning, I would expect some sort of bounce, right? I'd be looking for a bounce before we move lower as well, and price couldn't even get up to the value area high. Instead, rather than coming up here and testing these low volume areas and the bounce here, it couldn't even come up and test this area here. So again, the fact that every time it tried moving higher, it couldn't test that, and then ultimately couldn't even touch the previous highs, right? And you can see there's almost a triangle here. There is a triangle here, right? So consolidation happened, but the fact that it wasn't able to get up there, again, it's a sign of weakness. And it's something we have to be paying attention to, and we have to be in tune with. All right, so balance, bracketing, and value. A market is said to be in balance when we are trading inside a previous value, as I mentioned. And here you can see the market opened and began to bracket, which is the white rectangle, inside of the previous day's value area. As it broke lower, the market moved to a state of being out of balance, as a search for future value lower continued. Markets are constantly shifting from being in and out of balance as traders shift perspective of value as new information becomes available. Bracketing is another term commonly used for consolidation within the market profile. So you consider this like this market is in balance because it's trading inside of the previous day's balance, and it is bracketing. Bracketing, again, another word for rotational consolidation. So bracketing inside of value in balance.